Thank you very much, Naya. Good morning, everyone. It's a great pleasure to be here and a great honor to be invited. My first EIOPA conference that I went to, probably about 10 years ago, Karel van Huller was doing this job. And to be sat in the same seat as he is feels like a great honor to follow in the footsteps of the father of Solvency II. So thank you very much for the invitation. I really appreciate it. I will sit down and I will introduce our panel, who probably don't need much introduction, to be honest, because you've seen two of them already. But on my left, Shigeru Ariizumi, Chair of the IAIS Executive Committee and Vice Minister for International Affairs at the Financial Services Agency of Japan. Petra, I don't need to introduce you, do I? And finally, Nathan, who has been name-checked already, but yeah, Nathan is the Commissioner for Insurance for the state of Wisconsin. He plays as well as that job, he also plays a very active role in the NAIC, the National Association of Insurance Commissioners. I won't run through all his responsibilities because there are a lot, but he does chair the influential Financial Condition Committee, and he also participates in working groups on accelerated underwriting, health innovations, and many, many others. But it's great to have you here, Nathan. Thank you. Good. So our panel session, this panel session is really talking about global trends in insurance regulation, how supervisors and regulators are responding to the changing risk landscape. The way it's going to work is we're going to have 3 rounds of questions. The first one is covering the macro environment. And then we'll be taking a bit of a deeper dive into some other topics on turn the page, regulation, and what does this mean for practice. So, Shigeru, if I could come to you first. So what has been the supervisory response to these rising macroeconomic uncertainties that we've all been encountering? Inflation, market volatility, geopolitical risks.
Thanks, Chris. That's a very timely, important question. I think I mentioned briefly about structural shifts in the life insurance sector. So let me provide a little bit more detail, perhaps, on the macroeconomic challenges that we are facing. Of course, this is a very current topic, and it's not just current, but it has been there from before, but it has been more acutely being acknowledged by supervisors right now. And particularly, I'd like to focus about geopolitical risks, because when I'm at the FSB meetings and so forth, of course, as Petra mentions, there's a lot of discussion about non-bank financial intermediaries. But there's also recognition that we need to pay closer attention to non-financial risks. And I think this is becoming increasingly important. And geopolitical risks is particularly very challenging. For example, we may see sort of isolated, what we thought would be an isolated sort of geopolitical tensions around the world. But in real life, they are actually could be quite interconnected, which makes it much more difficult for the financial institutions and also for supervisors and regulators on how to assess geopolitical risks moving forward. Of course, it has a lot of implications, including how the economic conditions will be, for example. But as highlighted by Petra, it could mean about cyber, it could mean about operational resilience, but it can also affect insurers in terms of investment risks, how much revenue you can get from insurance business as a whole, also thinking about business continuity plans, contingency funding plans, and so forth. So it has a lot of implications that traditionally we would think about it in terms of market or business model operation in general. But its geopolitical risks are quite a challenge in terms of how do we sort of identify, assess, and monitor these risks moving forward. Another thing that we we discuss a lot in the IAIS context is about macroeconomic certainties. Our collective discussion, I think, is quite helpful. As I mentioned, international policy development is actually very crucial given the importance of geopolitical risks, which are being discussed not only at the supervisors, regulators level, but more or less at the G7, G20, FSB, and the political policy makers will have a lot of discussion, and we need to understand what is going on that part. As an IAIS, last but not least, we do share best practices and develop global standards. So our ICPs, the insurance core principles and supervisory material, will continue to be important to consider, also consider flexibility among jurisdictions. So let me stop there.
Thank you very much for kicking off, Shigeru. Nathan, I'm wondering if I can come to you next and ask you, how is the macroeconomic environment affecting the industry in your markets? And I guess, how is the supervisory community responding?
Yeah, thanks for the question, Chris. And I think before I answer that directly, I'll just take a couple minutes, and I'm sure most people are familiar with the U.S. Regulatory structure, but for those who aren't, we do have a unique structure in that we have 56 separate jurisdictions that really make up the U.S. Regulatory system. And under those, we then work together through the National Association of Insurance Commissioners to coordinate our efforts. And similar to what Shigeru was saying about the IAIS serving as a standard setting and convening organization at the global level, that's what the NAIC does for us in the U.S. So when I talk about the NAIC, I'm really talking about kind of the U.S. Insurance regulatory kind of community at large. And under the NAIC, we have 8 standing, we call them letter committees, because each one has a letter associated with it, that reflect the core lines of business, of insurance business, as well as the core regulatory functions that we serve. And as Chris had mentioned, I serve as the chair of the Financial Condition E Committee. And under that committee, we deal with everything related to basically solvency-related issues, valuation of securities, accounting practices and procedures, reinsurance, just a whole range, anything related to solvency. So I say all of that as kind of a background, but to get to the question directly, we're all familiar, and Shigeru touched on it in his comments, with the dynamic of the prolonged low interest rate environment coming out of the great financial crisis, and the challenging environment for finding yield given that prolonged low interest rate time period. As a result of that, there were 2 things that we witnessed happening. One was insurer investments shifting to more complex assets, more structured and less transparent from a regulatory standpoint, and also the increased activity of private equity, especially in the life insurance sector. And so under the Financial Condition E Committee, we've been looking into those 2 trends or shifting dynamics, if you will, over the last few years through a couple main initiatives. One of which being, we refer to it as the 13 considerations applicable but not exclusive to private equity, which is kind of a mouthful. But we released a document, this 13 considerations document, in 2022 that basically outlined 13 issues that we, the NAIC and the U.S. regulatory community, felt like we needed to be taking a closer look at given these changing dynamics and new trends. So everything from offshore reinsurance, affiliation agreements, holding company structures, the increase in pension risk transfers. So we've identified these 13 areas and have been kind of working on figuring out how to resolve them in terms of making enhancements to our regulatory system over the last couple of years. So that's kind of the first initiative. The second one we refer to as it's a holistic framework for the regulation of insurer investments, or the investment framework for short. And we released this document during the summer of last year, and it builds on the 13 considerations, but kind of takes more of a focus looking at the role of ratings provided by credit rating providers, specifically related to these structured, more complex assets. Also looking at what enhancements do we need to make as a broader regulatory community to understand these investments in more detail. We refer to it as our centralized investment expertise. Just looking at, okay, given how the shift has occurred, what tools, what resources do we as regulators need to understand the risks associated with this shift? And then the last being taking a closer look at our risk-based capital framework and specifically risk charges, capital charges associated with these new complex assets. So it's a whole myriad of different issues, but all related to really these shifts that we've seen over the last 10 to 15 years.
Thank you, Nathan. Yeah, there's a lot on at the NAIC, a lot of work to do on these emerging issues. It's really great to hear the update on what you're doing there. Petra, thinking about the macro environment from the European perspective, given the cross-border nature of the insurance in Europe, how does EIOPA address these challenges posed by economic disparities between member states? Some are richer, some are poorer, and particularly in a volatile macroeconomic environment.
Yeah, so I think it goes a bit like IAIS, NAIC. I think first of all, it's about seeing the risks, discussing the risk, learning from each other, and that is what we do. So we are very, I think, very happy always with the exchange in the IAIS, but also within my EIOPA board, where every board we have of the 2 days a half day really dedicated to a closed session with only supervisors, where we also need to discuss some detrimental cases that I touched on in my speech, but we also share the outlook. And in that discussion also ESRB joins, because we are also part of the ESRB table. Now, what do we then focus on at in EU? I think it's listening also to the members what the worries are currently. And they first of all stem from some of the risks where maybe other markets have a first go. If I think about private equity, private credit, I think the US and then the UK colleagues, they really flag strong concerns. That does trigger an additional assessment in EIOPA and in the EU. Then are we that concerned? I think the level of the percentage of investment is not there that we are concerned, but we are already learning what to look for thanks to the information sharing that is happening. Something else that we look at as EU is that with Solvency II being firmly in place, I would say, and solo supervision, group supervision in place, we are moving our attention to reinsurance and to some other creative structures that we see that we wonder are sometimes they are good, sometimes we have some concerns. And so we just issued an advice on mass lapse where we indeed had very different approaches. We tried to come to one approach, but we are also looking into asset-intensive reinsurance, into ILS, building on the knowledge that is also at other tables available, sharing with each other how to deal with that. And then indeed, we have different markets with different super in size and in size of teams in time. So I think it's essential that EIOPA then brings it together and actually helps everyone to what to look for when they look at a reinsurance contract in order for that to be recognized as risk mitigating, what it is you need to look for. And I think that is where we have an important role.
Thank you, Petra. Thank you. So round two of our questions is really focusing a bit more future-looking and thinking about how we regulate and what does this mean for practice. Shigeru, considering these shifts in the global regulatory priorities that you described in your speech, what do you think are the most significant challenges facing insurance supervision over the next 5 years?
Thanks, Chris. I'd perhaps like to mention about our strategic plan 2025-2029, which are the areas we have focused our attention on. And first, I think, needless to say, one of them is climate change. And we have also done our pioneering work in this aspect, and currently we have worked on this paper which outlines the macroprudential considerations, disclosure, and supervisory reporting, which we put up for public consultation. And we will finalize this project. This is our fourth and final, actually, consultation, and we will finalize this project early next year when we intend to publish a comprehensive application paper to support supervisors in responding to climate-related risks. And the second, I mentioned briefly about digital innovation. And of course, here we need to look at both ends, how to harness the innovation, but at the same time address and mitigate the risks that are involved in these innovation. Just turning to my Japan experience, when CrowdStrike happened, people reported to me that, okay, Japanese institutions were not hurt very much because they did not use CrowdStrike. So my kind of question is, do you think that's a really good thing? It's about what things that you think that you can safely use and what things that you don't think. So just being very cautious does not work, actually, in this space. You need to kind of think through about what kind of digital innovation could you use in your business operation, which can range from really, very much operational, internal operations, internal compliance. Then you can go all the way to using it vis-a-vis your client, customers, and so forth. So there's a whole range of potential usage of digital innovation, including AI. But we also have to be mindful that this is not just about sort of a digital innovation per se, but because we need to look at cyber, which is a whole lot, another different story. Of course, Petra Hielkema has been a champion of our fintech forum, meaning that she takes up all the fintech-related issues, and she has been very incremental in promoting our work through this fintech forum, which tries to exchange views among supervisors, try to support supervisors to effectively adapt to digital innovation as well. And you may know that we have just issued our application paper on AI as a public consultation document. And we very much look forward to your input on this. Last but not least, I mentioned briefly about societal role of insurers. And this is becoming more and more clear that we have to be looking carefully and try to promote this aspect in the insurance space. Of course, if we look at insurance society resilience, we look at risk management, pooling and diversification of risks, and mitigation of adversities. And these will be very important, particularly for the vulnerable part of our society. And this is very important that we try to establish and create an inclusive insurance markets categorized by product design, distribution, and servicing as well. Also, let me just highlight the importance of NatCat protection gap, as Petra Hielkema mentioned about EIOPA's discussion paper. And these are very important because this is not just an issue for Europe, not just an issue for Japan, not just an issue for the US, but also involves emerging economies as well. So we really do need a global response in these aspects, meaning that we need to cooperate in the international sort of a wider community, because this cannot be solved just by insurance supervisors. We need to take a multi-stakeholder approach. We need to involve policymakers. We need to involve the respective industries. We need to work together to try to address these challenges moving forward.
Thank you, Shigeru. On the topic of NatCat, we've heard a European perspective, we've heard a global perspective. Nathan, it'd be great if you can bring us up to speed with what's happening in the States and with the NAIC on trying to close this natural catastrophe protection gap.
Definitely, this is a hot topic, as you can imagine, in the U.S., just as we've heard it is elsewhere. And I'll actually build on some of the things that both Petra and Shigeru were just talking about. But first, I'll just say, obviously, the U.S. is a big country. And out of our, the 50 states plus Washington, D.C., and the 5 U.S. territories, which make up our 56 jurisdictions, we're all dealing with climate challenges in some form or another. Obviously, my colleagues down in the Florida and southeast part of the country are dealing with hurricanes and tropical storms. And the western part of the country, we have wildfires. And I'm in the central part of the country where we don't have either of those as much, but we have more severe convective storms. So tornadoes, hailstorms, a derecho, which is just a thing that entered our conversation last few years. People didn't even know what a derecho was, but it's apparently a heavy straight line wind that comes in and just devastates everything in its path. And that's something we now live with. So I say that because, across the U.S., this is something that we are, as insurance regulators, recognizing that we do have, it's a shared challenge, and we have to come together, as Shigeru was saying, and really work together. And it's not just the insurance regulators working together. We have to get our policymakers involved, and they are. And they're getting more involved because, frankly, they're hearing from their constituents more. Our state legislators, our members of Congress, over the last year or so, we've had more contacts from policymakers than we ever have, specifically related to affordability and availability of homeowners insurance. And that's heavily related to the changing climate as well as inflation over the last few years. So earlier this year, the NAIC adopted its first ever national climate resilience strategy, which is kind of a multi-part strategy focusing on data collection and analysis, pre-disaster mitigation efforts, and engaging all the stakeholders that we need to raise awareness, frankly, make people aware of steps they can take to strengthen their homes, to reduce the risk of loss in light of more severe climate events that are occurring, and then also engaging with industry as well, because we realize that it's a challenging issue that unfortunately is not probably going to be, it's not going away. The issue of climate change and the pressure that it's going to continue to put on the property insurance market and homeowners insurance in particular is something that we're going to have to be dealing with for many years. And in a way, I think because it is becoming more front of mind for a lot of people in the U.S., we've seen more of an interest from our policymakers in terms of helping to provide funding support, helping to provide support in raising awareness. And so, we're encouraged by that response, but it does present a challenge.
Thank you, Nathan. Yeah, lots to think about there. Petra, we're running quite close to the end of time now, but I did want to give you an opportunity to fulfill your new job description, the FinTech champion. And tell us a little bit about how this digitalization and technologies, what new regulatory frameworks and innovations are emerging to address these new risks, and which key areas require global coordination?
Yeah, and that's an excellent question. And indeed, I've never have done so little to then be the champion. But as a champion, you get to chair actually a group of very inspiring people. Those are the people in supervisory authorities worldwide that work daily on questions. What do we do with AI? How do we supervise that? What do we do with generative AI? What are we looking actually at? Is this really an AI or not? What is outsourcing if you have a vendor AI in your, and how do you supervise that? Is that outsourcing? Is that an internal model? These are excellent questions. but also what developments do we see? So we have a wonderful mix. And to be honest, we copied it into EIOPA. We also now have a group where we discuss this, but we also mix it with presentations from industry and tools that they have. Now, why is that important? First of all, because it is new. We are all confronted with it. We all need to build our knowledge. We need to understand it. And thinking together, sharing that, it is just helping us to be smarter, faster. And we need to be. I think that's first. Second, some parts of the world develop quicker than others. Some in innovation, others in regulation. And then we bring that together in what works, what doesn't work, and why. But most of all, I think what is important is that we have identified that in the IAIS, the principles, the insurance principles, do not necessarily need a change to be able to supervise this. And that goes back to what I said, being fair and inclusive and having good data and understanding decisions. You should always do that as an insurer. Yet, the how then becomes important. How do I do that when I look at an AI? And that is why an application paper is very relevant. It brings the information of those who do it together, and then it helps those who need to start doing it or doing it better. Plus, and with the consultation, and please respond to it, we hope to really hear from industry. These are areas where I think you can be harmonized from the start. And we should try to be as much as we can. But we also have, I think, a general interest in doing so in order to be efficient. And I'll stop there.
Thank you, Petra. Okay, a few minutes left. Just want to give one final question to our panel. As we heard earlier on, one of the big projects for the IAIS has been the introduction of a global insurance capital standard. After a long process, we are nearly there. I think it is the ICS is set to be adopted at the IAIS meeting in Cape Town next week, or next 2 weeks' time. Shigeru, you've been involved with this, obviously, very closely. Can you just share anything, your thoughts on it, and particularly on what's the next steps and implementation process?
Thank you. Thank you very much, Chris. I think I just outlined what it was agreed. So let me focus on the way forward, perhaps. And first of all, the IAIS looks to provide sort of examples and guidance, perhaps, to support supervisors on the implementation of the ICS. So that is one thing that we are looking forward to do. We also acknowledge that it will take some time for jurisdictions to finalize any sort of necessary regulatory or supervisory responses or changes to align with the ICS, taking into account jurisdictional circumstances. But it's not just the members who will have to do the work. It's also on the part of the IAIS to prepare for the implementation assessment. So we have our own work to do to prepare. So the executive committee has agreed on a two-step approach for ICS implementation assessment. And in 2026, we will coordinate a baseline self-assessment by IAIS members on the progress in implementing the ICS. And the IAIS will then aim to start an in-depth targeted jurisdictional assessments in 2027. So that is the basic timeline we have in mind so far. Of course, then we need to think about US AM, and as the final AM will be the US implementation of the ICS, the assessment of its implementation will be subject to the same timing as the ICS implementation assessments in other jurisdictions. That means 2026, there'll be a self-assessment and intensive targeted jurisdictional assessments aiming to start in 2027. And it will be subject to a consistent methodology, including both qualitative and quantitative analysis, assessing whether the jurisdictional implementation at least meets the ICS, whilst also focusing on AM specificities. So that's the basic idea moving forward.
Thank you. Just quickly from Petra and then from Nathan. Petra first, any thoughts on how that implementation process will work in Europe with Solvency II?
Well, I think we first need to get Solvency II review in place. I think it's good to start with a document that's stable. So I think that is the first. Second, there will be, I think, a strong cooperation between the European Commission and EIOPA and its members in ensuring that we have a proper assessment. But I think it starts from agreeing on the methodology on how to do that, and that is what we will be working on together going forward.
Nathan, finally. Yep.
Yes, obviously a major accomplishment and milestone, and kudos to Shigeru for his leadership through this the process. And I think overall this just reflects the commitment of the international insurance supervisor and regulatory community to move forward together while recognizing and maintaining appropriate jurisdictional flexibility.
Perfect. Thank you so much, everyone, for joining us today, and please show your thanks for the panel. Thank you.